Welcome. My name is Martin Straith, founder of Trend News. What I'm here today to do is I'm going to record a presentation we did at the World Outlook Conference in Vancouver on February 2 and 3. Reason being, a number of people there requested that they be able to kind of review it again. So to start with what it is, I looked at Albert Einstein and his definition of insanity, which is doing the same thing over and over again, expecting different results. Now, as an investor, making the same mistake over and over again, hoping for better results, can really crush your portfolio. You know, when you invest, you need to make sure that you learn from your mistakes. Now, example I gave there was, let's say you're at a conference. While you're there, you're making all kinds of notes, you're seeing lots of presentations, you're seeing lots of ideas. So you're writing down a list of stocks that you liked. And then you get home afterwards, and then you start to invest, you start to buy those stocks. So let's say you bought a basket of stocks, say 5 or 7, 8 stocks. And then you start to kind of monitor it over the next week or so. You start to look at those stocks. And let's say that one of the stocks you bought was $10. And then you notice that about a week or two later, and now it's up to $11. So you're feeling pretty good. And then a couple of weeks later, as you're checking these stocks, you see that same stock now is up to $12. You're going, wow, 20%, not even a month. And then the next time you see it, it's down back to 10. And you kind of shrug it off, going, well, that's part of the volatility of the stock market. And then next time you look, it's down to 9. And then it's 8. And then it's 7. And now you're getting nervous and you're starting to sweat a little bit. But then it goes back up to 750 and then up to 8. You're feeling a little bit better. And then sure enough, the next week it goes down and now it's back down to 7. So now you're just going, you're starting to lose a little sleep here. You're starting to say, well, you know what? I think I'm just going to get rid of this stock. It's just too volatile for me. So I'm going to sell it. And then you say to yourself, I'm going to sell it when it gets back to $10. It's such a common mistake. So when you buy a stock, you should be thinking about right at that time, before you get panicky, before everything's happening, before you buy the stock, think about how far would you want to let it go before you would want to get out. How much of a loss are you willing to take? I mean, it might be 40, 50, or 60%. And if that's a decision you've made up front, you know, in a calmness, you've done your work, you're okay with that, that's fine. But you don't want to be making these kind of decisions when you're anxious and you're panicking. So if you're only going to remember 2 things about this presentation, please remember these 2. Don't repeat the same investment mistake over and over again, hoping for better results, and always decide your exit strategy before you buy in case you are wrong. You remember these 2, if you apply that logic, you're going to do fine in the investment world. All right, now this conference was all about investing in energy in 2024. So what we did is we focused on those areas, and what we did is we talked to the audience about the main sources of energy globally. We talked about our energy investment ideas for 2024, and we gave them 12 stocks to consider for their portfolio. So I'm going to give you the same information. Now, here's the sources of energy worldwide. This is up until about July 2023. And as you can see, coal and natural gas, they represent almost 60% of all the energy from globally. Then, of course, you had hydro, nuclear, wind, solar, oil, and biofuel. Now, when we're looking at energy, you know, we're really talking about commodities. And when you look at commodities, you have to understand the supply-demand price cycle. And what that is basically as the prices rise, as a producer, your cash flow increases. And that's great news. You're feeling, well, great, we're making some good money here. And you're motivated as a producer, you would then be motivated to produce even more. So you're going to invest into production because you want to get more product out to market. Now, the thing is, every other producer is going, you know, is thinking the same thing. So ultimately what ends up happening is when the prices are high, cash flows increase, production then ramps up, and ultimately you end up with supply outpacing demand, and then the prices start to decline. And then that decreases your cash flow, and basically then that encourages these producers to kind of pull back and even cut down on, shut down some on their production. And so ultimately at that point, now supply is not enough to meet demand, and then the prices start to rise, and then we go through this cycle again. The lines here, the best cure for rising prices is rising prices. The best cure for declining prices is declining prices. All right, let's look at natural gas. Cleanest fossil fuel, cost-effective, reliable, versatile. We like it, but it's very volatile. So if we look at a seasonality chart here, we can see that now, right now I'm talking, it's early February. So typically you're seeing that this is kind of near the bottom of a natural gas cycle, and it's exactly what's happening right now. Now, generally in February, you tend to get a bit of a bump, and then it's really not till March that you start to get a nice run up. And that's really, one of natural gas's strongest periods. Now, you have to remember that on a seasonality chart, this is a 20-year average. So what it does is it smooths out all the volatility. And, if we look at a live chart of natural gas, we can see that, you've got extreme winter conditions here, you get the price jumps up. Then we had, slowly going into seasonal slow period. And then of course we had COVID, so the prices kind of tanked. And then you had extended cold period, and you had a COVID kind of recovery, excuse me. And then you had this nice big rally. And then the price kind of came back down. And then of course, Russia invaded Ukraine, and that caused all kinds of havoc in the energy cycle. And then we basically, at this point, we had the US, Australia, a number of countries sending, liquid natural gas over to Europe to help their case because, Russia's not supplying the natural gas anymore. But you ended up with a surge of supply. And then you couple that with, you had the warm winter in Europe, especially, you saw the price go from about $9.50 all the way down to $2. And really today, we're right back down to that $2 level. So when we look at natural gas for investing, some ideas we've got: Enbridge, large natural or oil and natural gas, nice dividend at 7.4%. You can see it had a nice uptrend going there, but it broke through that, and that's always a bit negative. So now we want to watch that for Enbridge. This is a strong support level. You can see that it's held about 3 or 4 times. We may get a test there, but we'd want to see it hold. And ultimately, you want to see it get back up and push through a new high through this resistance. Now, looking down here, this is relative strength index. If you're not familiar with technical analysis, it's one of the many indicators our models use, but it's a great kind of tool for the average investor just to get a glance. Is this stock overbought or oversold? So anytime you get it around 70 or above, that's considered overbought. You can see here it was about 70, and sure enough, it got up to there, and then it sold off. Down here, it was oversold, and sure enough, you got this nice big rally. So if you want to buy stocks, you really want to think of, that you want to be, sellers when people are buying, and buying when people are sellers. And so that's old Warren Buffett's, contrarian ideas. AltaGas, similar story. Look at that nice uptrend, test support, held all the way through. We'd like to see it get back to support so we could get a nice buying opportunity. Again, relative strength here is right in the middle, so it's not really telling us much right now. And then, of course, you've got a way to play it with via the ETF. So this is on Horizons, a natural gas ETF. So this is just a play on the price of natural gas. You see it's on a downtrend here and a much steeper short-term downtrend right there. You can see that it's getting closer and closer to 30, so meaning it's getting closer to being oversold. Look at here's where it got very oversold, and you got a nice run up here. Okay, so that's some natural gas plays you can consider. So let's look at nuclear now. Now the question would be, well, why would you want to buy into nuclear power? Well, there's some very good reasons. Nuclear power is stable and it's reliable. These plants, they run 24/7, continuous source. It doesn't matter what the weather is. It can be raining, it can be cold winter conditions, it can be a hot, sunny summer day, doesn't matter. The other big key is, we've got solar power and we've got wind power, but those are intermittent. At night, you don't have any power coming from solar. And during the day or at night, if it's not windy, you don't get any wind power. But so you need this base power, this constant, continuous base power, and that's where nuclear really comes in. It has a real key role to play because it provides 24/7 continuous power. Then you've got, low greenhouse gas emissions, very important. Public sentiment now is starting to support, nuclear, even amongst the environmentalists. At COP's 28, we had more than 20 countries, Canada and the US included, where they launched the declaration to triple nuclear energy. That is massive. And it was being led by, of all people, John Kerry, the environmental guru from the US, who, 6, 7 years ago hated nuclear. Now he's a key proponent of it. Technical advances. We got in France, they've now developed technology where some of their plants are recycling up to 95% of their spent fuel. So dramatically reducing radioactive waste. So now we look at new plants. You've got the World Nuclear Association. They're saying that there's 60 nuclear plants under construction, and there's 110 of them currently planned. If we look at current, you've got 436 plants in operation globally. You've got the US leading the way with 93. You got France at 56, China 55, Russia at 37, and Japan at 33. So there's a lot of numbers there. So let's crunch the math out here. So currently there's 436 nuclear plants. That declaration to triple nuclear, well, that would take that 436 to 1,308. Or the equivalent at least. Well, if you've got 60 under construction and 110 planned, well, that would knock off 170 of them, but that would still leave you with this shortfall of the equivalent of over 700 more nuclear plants needed. Now, of course, they're working on fusion energy that doesn't need uranium, but that's still a long ways off. It's not at all viable right now, and it's not reliable right now. So that means there's going to be an awful lot of uranium needed to fuel these plants. So if we go back to that supply-demand price cycle with uranium, we got to remember this. It really starts to tell the story of when uranium is a good buy and when it's not. Now, when I started the trend letter back in 2002, the first recommendation we gave was to buy gold. And we did that because we saw this huge opportunity where Alan Greenspan was, talking down the US dollar. And to me, it really made sense. If you're gonna knock the US dollar down, what better way to play that than to buy gold? Gold was $290 at the time. Well, gold prices went up to, up to $1,200. And, that was like 2011, 2012. So obviously we made some great gains in that. But just not even a year later, we saw another golden opportunity. We saw this perfect storm where we saw that uranium was getting, nuclear was getting to be much more popular, the idea of it. But we saw this huge depleted supply of uranium. So we had this perfect storm where we had, more demand coming from uranium and nuclear and a depleted supply. So we recommended buying uranium stocks when uranium was $11 a pound. Over the next 4 years, it went up to $147 a pound. Needless to say, those stocks did fabulously, 500, 700,000. We even had a few go over 1,400%. But then you can see, remember that cycle, you've got way too much speculation. The producers were just pumping this stuff out there. You ended up with way too much supply for the demand, and, you got to turn. But something else happened here. This was 2007. Think to yourself, what else happened back then? Hopefully you'll remember this. We had the financial crisis. So we had this double whammy. We had the supply demand price cycle where we had too much supply. And then we had the financial crisis, which really impacted commodities, including uranium. So what happened then? We had this big drop. But eventually, after a few years, we had a bit of a bump, but then we had this really long decline. And again, think about that. This is 2011 now. What happened then? And hopefully you'll remember this story, Fukushima disaster. When that happened, public perception turned extremely negative for nuclear. Projects got halted, plants got shut down, and the nuclear or uranium prices just tanked. And that lasted for years. That lasted, about 6, 7, 8 years. And really, it wasn't until we were at the World Outlet Conference in 2020 that we saw that same opportunity. We saw that cycle again, where the prices had declined to the point where the producers had all shut down. And so now the prices, there was just no supply of uranium. Remember, there was 436 plants. Most of those are still in operation. Some did get shut down, but they needed uranium. So all of a sudden we had this, shortfall of supply, and the prices started to rise. So at that 2020 World Outlet Conference, we started pounding the table to buy uranium here. So uranium price was about $26 a pound. You can see that it had this nice run up here for about 3 years. It had a double up to 50. And then you can see here, since just last October, it's gone from $50, it went up to 106. It's actually down to 100 now, but you had this big run up again. And again, those stocks, 500, 600, even 800% gains on those. So we've done really well. We hit this ultimate buy time and this one, and we've had some massive gains. Now, if you're sitting at home watching this and you weren't in on the uranium, your obvious question would be, well, I've obviously missed it. It's just too late, I guess. And to me, the answer is no, I don't think it is, but we do need to see a pullback. That declaration to triple nuclear energy, if they're going to follow through with that, if they're going to do that, you're going to need a lot of uranium over the next couple of decades. But again, things get out of hand in the short term. To me, we need to see a pullback at least to this level. Ideally, you ultimately get one back to this level, and eventually you will. So if you weren't in uranium stocks yet, watch for some more pullback. Like I said, we've gone from 106 to 100. If we can get down to the 95 range, that might be an opportunity for you to get in. So here's some stocks that we like. Obviously, the big one, Cameco, that's the big granddaddy of them all. Again, you can see, it went from what, 37, even less than that, up to about 67. So, a near double here, tested support, close to testing, tested support, but each time support held. You can see on the RSI, we can see that it's getting close to being overbought. You see it was overbought right back here, and you had a nice pullback. If we could get the same thing, you might get a pullback back down to here, and that would be a great buy opportunity. Laramide Resources, very similar. You can see here, nice steeper uptrend. Now you can see in here where the support broke a little bit, but then it gathered its strength again, and it's rallied really strong, setting a new high here. Again, you can see here we're getting overbought, but look at this. Look how overbought it got back here, and it pulled back, but nothing extreme. If we get some more overbought here, it's going to give you another opportunity to get in. Sprott Uranium Trust. Now this is a pure play on the price of uranium. Basically what they do is they buy uranium. So again, test support, test again, close to test, and it just keeps ramping up. So again, this one's looking to push to new high. Again, you can see how overbought it got, overbought here, nice pullback. So, we're looking for a similar story coming up. Denison Mine, again, same thing. You went from 140 up to over 280. Again, another double. Test support, close to test all held there. And again, running up to new high. And again, we're getting overbought. So again, all of these stocks should be providing a buying opportunity, hopefully soon. This is Global X. This is an ETF. So if you didn't want to buy individual stocks, this is a basket of uranium stocks. You can see you've got this nice, strong, longer term uptrend, and then you've got the steeper, shorter term uptrend. Again, this went from what, 18 up to about 32, so close to a double. Again, we're getting overbought here, so we'd like to see a pullback. Uranium stocks we like brought. This is a junior uranium ETF, and basically, again, same pattern here. Nice longer term uptrend, and here's a shorter, steeper one. And again, support holds all the way through. You can see that support, we're getting close to being overbought. Again, this one went from 14 over to 30, so over a double. So there's a bunch of uranium stocks that you can look at. Again, I would wait for a real pullback and then dip in once you get to that support level. Now, let's look at oil. Why would you buy oil? I mean, everybody's telling you fossil fuels are evil. Governments everywhere, they're telling the banking system you shouldn't be supporting oils. Oil's terrible. We'll all be driving EVs, so we don't need oil anymore. This is such a load of bunk. I mean, absolutely. Look at demand. Growing demand, especially in the emerging markets. In India, 14% of their 1.4 billion people do not have electricity. There's 1 billion people in the world that do not have electricity. Now, also something that, all of these naysayers on oil seem to forget, all they need to do is look at the clothes they're wearing, look at their cell phone, look at their computer. I mean, these things, oil's all part of all of those things. The shoes you're wearing, you drive an EV car, well, you still have tires. Well, oil's part of those tires. That asphalt highway you drive on, oil. So again, these are things that we use every day in our lives. And those people in those emerging countries, they want this stuff. And we're going to see they will get it. Now, here's a great visual of how oil impacts our life. Again, vehicles, just the seats in the vehicle, all kinds of parts of the vehicle, obviously fuels, but look at medical supplies, electronics, agriculture, toys, office supplies, computers, sporting goods, furniture, beauty products, household items, accessories, construction materials, and clothing. Oil is required for everything. So if we look at supply, we know that there's a lack of investment. Capital expenditures in this sector are at 30 to 40-year lows. Rig counts continue to decline. And why is that? Well, you've got the COP28 group. You've got governments globally saying you can't have fossil fuels. We need to get rid of fossil fuels. It's like they've never seen this picture. It's like they have no idea that the clothes they're wearing, the computer they're using needs oil. So you got that. And so what have they done? Well, they've increased windfall taxes, they've increased regulations, and they've allowed no new permitting. So, there's that supply, demand, price cycle again. Because when you combine all that, so when you increase demand, so emerging countries, and you have a global concerted effort to squeeze supply, I mean, a 5-year-old with a calculator could figure this out. That's going to result in a huge supply problem over the next few years. We're going to see $100 oil and likely $150 and higher over the next few years. Now let's look at a supply or a seasonality chart for oil. As you can see, here we are right now. We're in early February. Well, that is historically the time when oil starts to rise. So seasonality wise, we're at the perfect time for oil to start to rise. So, you can see seasonality, the oil typically starts to fall down into December, which is pretty much what happened. So if we look at oil's chart right now, there's that decline right into the December, and then you can see it started to rise. Look at this though. This is resistance. Triple top here, unable to break through. Tried again last week, unable to get through. Massive resistance level. So $78 for oil, that is a very key resistance level. And then you've got down here, You got between 68 and 66 is a very strong support level. As you can see, it's started to rise a bit, but it's been coming down. We may see RSI drop back down to here, which again would give you a great buying opportunity. Ways to play oil. The USO, this is an ETF, and it's again a pure play on oil. And as you can see, it's pretty much emulated how oil's moved. Steep downtrend. Now we bought this, we sent this to our subscribers early mid-December. You can see we've already right here. It's had a nice bit of rally, but now it's challenging that uptrend line. We could see it challenge this bigger uptrend line. So again, this RSI drops below, excuse me, then that would be an opportunity. Next one, we've got Meg Energy, nice uptrend line. You can see that it was challenged here so far. It's been able to hold above, but it's, you know, that's a real challenge right now. Ideally, you've got support here, and then you would want to see a rally up and through this resistance level, and ultimately you'd like to see a new high here. Next one, we've got Occidental Petroleum. This is Warren Buffett's favorite play. He owns a ton of this stuff. Now, as you can see, it's not doing very well. It's, you know, it's downtrend line here, steeper downtrend line here. You can see it tried to break out, couldn't do it, tried to break out, couldn't do it. It's starting to head down to, you know, towards that 30 level. That would likely be a buying opportunity. Now, we've got a number of other oil stocks that we're looking at and a few others that we have, but that just gives you a good idea of some there. So that's 12 energy stocks for you to consider for your portfolio in 2024. Now, as we go forward, 2024 is likely going to be a wild ride. Be sure to have some hedging strategies because it's going to be some up and down times here. You know, we've got 64 countries in 2024 are having an election. That's the most ever in history. And of course, one of those countries is the one down south of the border in the US, and that is going to be an absolute gong show. You know, we're going to see civil unrest. It doesn't matter who wins. The other side is not going to accept it. It's going to be a real nasty mess there. So be careful out there. Think about that. Now, we just focused on energy here. Just so you know, we also cover equities, commodities, precious metals, bonds and interest rates, cryptocurrencies. Because why? It's all connected. You cannot be an investor in gold and not understand how interest rates and bonds and currencies affect the price of gold. You know, you can't be in the equity markets if you don't understand interest rates, how they affect equity, sorry. All right, so it's all connected. Now, what we do, we tell our subscribers what we're buying and why, and we tell them what we're selling and why. This is a pamphlet we handed out at the conference. There's our 3 services: Trend Letter, Technical Trader, and Trend Disruptors. We also have Headlines. That's a free service. So that's where we send out headlines every morning during the week. And those are headlines that we think every investor should be aware of. And you can just click on the headline and read the article if you like. Contact us at info@thetrendletter.com if you've got any questions. And you can just click on the QR code, should work for you. If it doesn't, just expand this video. And right now we offer the people at the conference 42 to 65% discounts on our 3 services. And we'll open that to anybody watching this right now. At the conference, we were supporting Heads Up Guys. We had a raffle for a drone. This is a service for men, about men. This is for men, mental health support. This is 2024, guys. Get rid of the stigma. If you're having issues, get some help. You know, the founder of this organization, psychiatrist, he told me the 2 main issues for men are loneliness and a loss of sense of purpose, especially men when they're going to retirement. So if that's you, get some help. If you have a friend, if you know somebody, show them headsupguys.org. They got a great bunch of services. So please, you know, don't sit there and take it all in on yourself. There is support out there for you. And again, at the beginning, I said, if you only remember 2 things, remember these. Don't repeat the same investment mistake hoping for a better result. Always decide your exit strategy before you buy in case you are wrong. All right. We do these 10-minute, I mean, obviously this one's closer to half an hour, but generally we're going to be doing 10-minute videos. Give us your feedback. Tell us scenarios you would like explained. Send them to info@thetrendletter.com. And then be sure to, subscribe to our site. Just hit the subscribe button below. And thank you for viewing and enjoy your day. Take care.